What's up, guys? How's everybody doing? Good afternoon, good evening, good morning, depending on what session you're in. It's been a while since I've done a stream. So, what is going on? We're gonna give it a minute or two. Might be a little bit of a lag, but we'll get it started in a second. How's everybody doing? It's been have I done a public stream since I've been back from vacation? Let me just pop this chat out and get this out of the way. Pop the chat out. Have I done a public stream since I've gotten back? I don't think I have, right? No. No, yesterday, so. I am tanned. Yeah. Yeah. What's going on? Tugs, John, Fuzzy, Nick, Chadwick, Cornholio, Ripcord, Low Res. What's up? Cool. Yeah, so some awesome news for my wife and I. Cut vacation a little bit short because we had the opportunity to buy a new property, buy a new house, which is awesome. Originally, a long time ago, I shared the plans for a house that we were looking to build. This is just going to be a short story. For those of you that are new to BlockRoots and the YouTube channel, you know that I like to go off on little tangents. We'll get it out of the way really quickly, I promise. For a long time ago, I'd say probably 2-3 months ago. It's not that long in market time. It feels like forever, though. We shared plans for a new house that we were going to build. It's going to be a new barn. It was going to be, it was my wife's dream home, pretty much, put it that way. And we were taking over a property. It was going to be a short sale. The guy who owned the property, who was in telecommunications, had a lot of money at one point, but guess what? That business is no longer needed. He was in like the payphone business or something. Guy has like 20 horses, had a ton of money, and then lost it all. And we were going to be taking over a property, building on it, and that deal fell through on his end. There was a little bit of funniness to begin with, but not to get into detail, it didn't work out. And now we're going to be buying a house that is right on the water. So came home, going to make this deal happen really fast, and get to do a live stream. Okay, so for those of you that are new to the stream, my name is Ryan, aka Cantor & Clark. Myself and my partner Josh Rager, we are the co-founders of BlockRoots. I pulled up BlockRoots for the stream because I don't feature it often enough. Some people don't even know that we have an order flow and market profile course. It's not a trading group. It's not a signals group. It's none of that. It's entirely a course, right? There's a Discord as well, but that's the bulk of the material is in the course. It's not like we're hanging out in the Discord giving signals or anything like that. So yes, we are the co-founders of BlockRoots. If you want to check it out, BlockRoots.com. It's $50 a month, and if you sign up and you finish the course in a month, then that's it. You don't have to hang around and hang out and continue to be subscribed. All right, so just to get this out of the way really quickly, again, thank you for tuning in. If you haven't already, subscribe, hit the like button, yada, yada, yada. I'm still fried from vacation, so you have to bear with me. I'm not exactly, I'm probably not going to be as fluid on the stream because it's been a while, right? I'm a little bit crusty. But just as a reminder, none of this is to be taken as financial advice. None of this is financial advice. This is for entertainment purposes only. These are strictly my opinions. You get it. Right? I am not telling you how to trade with your money. You're seeing how I trade, right? You're seeing how I look at the market through my lens, right? It's not meant for you to take it and apply it. We have way different, we probably have, very different approaches, very different ideas for how much we're willing to risk. And again, this is not tailored to you. This is not financial advice. Last but not least, all right, and this is, this has been in the last 2 years, we've been partners with Phemex. So this stream is sponsored by Phemex Exchange. Excuse me. Like I said, I'm a little bit, I said crusty, but I meant rusty. They offer spot and contract trading, and they still offer a generous yield, right? So if you're going to park, you could park up to $1 million, I think 1.5, honestly, now. It's continued to go up. It's a good sign, right? 1.5 million in USDT, and you could earn like 10% on that or 11%. That's a substantial amount of money, right? Slight echo with the sound. Let me turn this down. Maybe let me just check the sound settings real quick, because we haven't had a sound issue in a while. So advanced audio properties. No, that's not what I want to look at. One sec. Should be good. Everything's still set up as I left it last time. I haven't messed around with anything. So we are partners with Phemex. If you want to check them out, if you use the link on the top left-hand corner of the screen, Phemex.trade, you'll get some sort of bonus or some sort of reduced trading fees, right? Can't hurt. It's definitely useful, especially when you look at how much trading fees add up over time. Okay, so how's everybody doing? How are we feeling right now? What type of horses do I own? So we have quarter horses, we have an Appaloosa, and a Frisian. So a Frisian is like a draft horse. Frisian is your how do I want to put this? It's like your Lord of the Rings horse. So yeah. Cantering Clark is the horse's name, is an American quarter horse. All right, and Journey is an American quarter horse, and Simba is an Appaloosa. You guys don't need to know everything, right? All right. Okay, so let's get it started. So we're gonna take a look at, and I think I went over everything that was relevant to the beginning of the stream. We're gonna take a look at BTC, right? What I have up on the screen right now, for those of you that are looking at this and wondering, maybe if it's your first time watching this stream, this right here is the ladder. So what you're seeing right now is the resting liquidity, right? And this is nearest to price. So this is $5 away, best bid to, $5 depth. And it's just, I'm just telling you that it's $5 depth essentially for what they're showing. So I keep looking to the left as if it matters, but I'm making sure that you could still follow along on the stream. But so what you're looking at is resting liquidity, right? These are your bids, these are your asks. Okay, I could very quickly execute from this. So if I want to, I could buy the best bid, right? Or I could place the best bid. So I immediately place a bid right now. It's immediate or cancel still for my market order setting. Go to good till cancel, place the best bid. And you'll see I was immediately filled for a bid. Now I could go ahead and, this is just one contract, so this is not something that we have to worry about. Not in any positions right now, but I could go ahead and just up and down the ladder, just place these orders, right, very quickly. And I could cancel them just as quickly as well by right-clicking on them. Now this is really useful. So when I'm scalping, I'm going to be using this. Make sure I flatten everything. I'm going to be using this, okay? Ideally, I will 99 times out of 100, I will mark it into a position. So very quickly, I will go ahead and I'll have, so for the sake of the stream, I only have one ladder right here, but to the right of the ladder, I'll normally have another ladder that will just be set up to click on for my market orders. Because if I want to use a market order, I could go ahead and immediately buy from the best offer. Right, so I could click the, actually that's to sell, excuse me, let me cancel that. I could click right on this above the current bid and I could mark it into a position like that. And then if I want, I could also, again, place those limit orders underneath. I'll go ahead and flatten everything. But ideally what I'm doing is whenever I see an opportunity arise, right, say for example, I'm looking at something just like we had recently, where we have a cluster, a pretty violent squeeze back up to what was, I think this was around, let me just put these things back on the chart, right around VWAP, okay, which is not something that you're always going to say, oh, it's going to act as, either support or resistance, but this is a, pretty violent squeeze. We return back to, the point of origin, and, I've shared this before, and I've said that, sorry guys, there's a door squeaking in the background. I've said this before, leaving this area and returning back to it, a lot of times what you'll see is that you'll offer another response from that point of origin. Now, sometimes it's cleaner, right? And you'll have something like this where it'll come back and sort of take out these lows, and you'll have this opportunity to play, a lot of the times what will be anywhere between a 50 to 100 basis point move. I'll mark it in whenever I get the sufficient signal that I require, which is really just, the response in the tape, price action, and if I have some level of offside indication on the footprint, like I see a substantial amount sold into this level, someone's anticipating that this is going to break down, gets very aggressive. Once I see that, I'm going to be very rapidly entering into a position. So say, for example, I immediately want to take from the offer. I buy right away. I could do that, or I could go ahead and, I could buy the best ask, right? Or I could just buy, the current ask, top of the book, essentially. And then if I want on the way up, let's say that I'm entering in here, on the way up in between, what I'll do at that point is I'll go ahead and on the other ladder I'll have it aggregated differently. So I will have, say, for example, on this aggregation, I will have, your 5 cent spread. And then on the other, I'll have anywhere between a 25 and a $50 aggregation. Let me just show what I mean by that. So we'll go to settings, we'll go to custom tick size, and then we'll just put this as 50. Excuse me, that's the rate. 1 sec. Put this as 50, and then you'll see that this would be how I'd have my other ladder set up. And then on the way up, right, as price is moving up, what I will do at that point is I will stagger my exits, right? And I will stagger them so that nothing. If I'm marketing with a substantial position, it's unlikely that I could just leave that equivalent resting order unless price is moving pretty rapidly and there's a pretty strong trend behind it. But I'll have to break that up a lot of times and scale out in increments. If I see that price is slowing down very quickly, I could just exit the position by either flattening it or I could just mark it out. So the purpose of this DOM is, in traditional markets, if you're trading, whether you're trading the ES, you're trading crude oil, you're trading the bund, you're trading any kind of legacy instrument or futures or anything besides cryptocurrency, pretty much, you're going to be looking at probably a bunch of markets next to each other, and you might gauge from the actual ladder pulling, stacking, and certain behavior that would help you trade based on that. But for the sake of trading crypto, I'm not really doing that with this. I'm just primarily using this for execution, right? So just for speed. So yeah, that's pretty long-winded. I just wanted to go over what you're looking at. So for anyone who's new to the stream right now, and now we could go ahead and take a look at current chart, right? Just go through the chat, see who's here, make sure I didn't miss anything, make sure you guys are still following along, and yeah, we'll get it started. Let me just take a sip. Anyone who thought, oh, wait a second. Okay. Bottom, like the video, yes, please. Thank you for the congrats. Where did you get that data on the left-hand side? It's aggregated order book. Okay, so it's on the left on your screen. Yeah, so that's just the DOM. That's on Quant Tower. Okay. What? Okay, went over that. No echo. Good. Yeah, well, that's good. I mean, it was difficult for a lot of people for good reason. It's difficult to step out of something. You just have that fear of missing out, right? So I sold some in February. I sold some in March. But then I sold the remainder of my spot when we were beginning to break down, right? So my last exit for spot, pretty much my last serious amount of exposure to Bitcoin spot was below my February and March exit. So thankfully I exited in February and March a substantial amount, because otherwise that more recent exit leading up to the May 19th move was poorer than the original ones. Okay, I still have a very fantastic average considering where I came from, but didn't get to sell the Pico top in its entirety. Okay, cool. All right, what's going on, Stan? Congratulations, Stan. I don't know if you told everybody else, but I know you have some awesome news. I don't want to spoil it for you, so if you want to say it in the chat, go ahead. You never know exactly what you could say on behalf of someone else because crypto is so sort of secretive to begin with. All right, so BTC, right? If we look at this higher time frame structure, like we've been saying, right, leading to this move, we accepted back within a prior range. We're looking at multiple ranges right here, right? Multiple areas of balance. You have trending periods in between. But this was a very long period of a bracket environment, a balanced environment. It's not really agreement if you consider how it ended up resolving, because ultimately it ended up looking more like distribution. Can't say that buyers really agreed with this. but market breaks down and reaccepts back within a prior area of acceptance, right? A prior period where we were ranging, even though within it, you could say there were micro trends within that structure. So back within there, right, we were within there for a while, and we kept talking about all the significant levels that we would need to look to. Got to break above 39, didn't hold above there. And once you accept back within this, after we had a 3-drive structure here, we accept back above the high and then fall back within the range. I always say that just brings the range back into play, usually in its entirety. Now, what I mean is, like, we break above here, we fail. A lot of times what I'm doing is immediately just considering that we're probably going to rotate all the way back down to the bottom. But you do have to consider the midpoint of the range. You do have to consider that there might be some type of balance at where the thick of the activity, where sort of the majority of the activity took place, which a lot of times is going to be, something like the point of control. Not a good place to take positions off of, right? Unless you're in a really strong trend. And in this case, we've been in a month-long range. So the ideal situation post break of this high up here, the ideal situation would have been holding this previous high. When a bullish setup like this fails, okay, especially after coming off of a big breakdown like this, it doesn't really make sense to continue to just look for a bullish setup after bullish setup. And that was my point yesterday when I tweeted, we should require a lot from price. Yeah, okay, cool. So you said it. Yeah, Stan is going to be a doctor. Stan's been a BlockRoots member for a while now. Super smart guy. Great trader too. So, a bullish setup like this fails, right? It fails to hold the high. A really bullish setup would have broken above the high and held it. Okay, you wouldn't have had this sort of indecision up here. And once we started accepting back within the range, I mean, you're really sort of grasping for straws at this point to hope that this holds. Because the last thing you want to see is acceptance outside the range and reacceptance back within, and then hoping you're going to find support within here. Not to say that it can't happen, it's just not the ideal situation. And after a big breakdown like this, you should just be really prioritizing A+ setups. So an A+ setup is, your clear transition from a very range-bound environment to breakout and, expansion from that consolidation. That's an A+ setup. A+ setup isn't, okay, I think that this is a triple bottom, and I think that although this didn't hold the first time, that it's probably going to find support a little bit lower down. No, this just was a very accepting area for price before. It pays for you to expect that that's going to continue until it's obvious that it no longer is going to continue, right? Until buyers make such a stand that price doesn't really have a chance to pull back, right? When people are really interested in something, they don't give it a chance to come back down in price. Sort of like, something that's really popular. It goes back to auction market theory, right? When people really are interested in something, they're gonna bid it all the way up until it escapes, where the last buyer is willing to buy, right? Where, that room is no longer willing to get loud about whatever it is that, is being sold. In this case, it's a two-way auction. Buyers and sellers are sorting this out constantly. So I think the most important thing to do right now is to indicate the most important levels on the chart. All right. I think that after you have a move like we've currently had, all right, and leading up to this, you had low, lower low after lower low after lower low. If you zoom out, you get a little bit of a higher resolution idea of what this range was. And sometimes it's good to put the line chart on. All right. So you could see that, these are the range lows, range highs, minus some wicks in between, right? Where it's not like we're writing them off and saying that they're not significant because there was volume in them, right? There were trapped participants in them. They led to a spillover for a reason. This led to a squeeze for a reason. But for the most part, this is where we spent, a month's worth of time. And these are the most important extremes on the chart. So I think that, while it is, I think it is bullish in the short term that we, somewhat reclaimed that higher resolution range, right? So I just mean, like, if I go to the 1 hour chart, you could see where more of the interaction occurred. But I don't want to be taking, like I said, setups unless they look now at this point, after breaking this daily, we did take out this low. I said not to write off these lows. Going back to 2019, it was a similar situation where we had a consolidation. We had that G candle, and people forgot that these lows hadn't been explored, or the previous lows weren't explored. So it's great. This was a great short-term opportunity to play, right? Because it was sort of an area where the market would potentially puke a lot of, where we'd see a lot of participation. So that play, though, I think should be isolated to the short term, because the longer term, the higher time frame structure now is clearly showing signs of weakness. So you do have to really, I think, shorten your time horizon for even a setup like that, right? Where it's like, okay, now we're back within the range, but are you still holding that position? Maybe are you still, if you longed off of these lows, are you still holding it now, thinking that it's going to come all the way up here? I think that you have to break this trade up into multiple pieces. So for me, the most important thing on the chart is reclaiming these higher time frame levels on the higher time frame. Otherwise, I'm scalping all around the clock. But trading the 1 minute chart, that's not what we're talking about right now. We're talking about maybe this being, and I bring this up and I'm saying it because there's a lot of people that want to talk about it, maybe this being the bottom, right? Well, what would be helpful in indicating that maybe this is the bottom, and you can see that this daily close level pretty much shares the multiple taps at this daily level before this was established at the daily close, as a daily close. And if we look at where we're currently at right now, all right, where the next logical area of resistance would be this low. After this spill, this was the high of the bounce, and that was a substantial bounce. But the day afterward, we need to see that we reclaim that level. All right. And the problem I think that I have with this is that if this is really bullish, right, after this move, the following candle should be something along the lines, and it doesn't have to be like this, but it should have been something like this, where squeeze is now bringing us to the middle of the range, and you're creating some sort of indecision. And ideally, if this is really bullish, it's going to find support over the top side of this prior cluster. It doesn't have to do that, but it certainly is going to find better footing, I think, a little bit further up, rather than, as you can see, just by looking at this daily candle, we've already come into a decent amount of resistance. And if we zoom out, you can see that, we had these awesome ranges to trade, these micro ranges to trade, but when we finally did press upward, this is the sort of, it looks like, and this was one of my targets initially, and this is why I got short at one point, was because we took this high, right, came back into a thick area, all right, and then after that you sort of have this perfect swing failure where you grab some liquidity. And why I say that level is important is because if we look back right here, that daily level right there, this is kind of an area where you might expect trailing stops to be dragged, all right. This is kind of your impulse candle that led to the retest, and then this further breakdown, and it's sort of one of the last anchor points besides going all the way back up to somewhere along the lines of 36. So that was one of the areas that I was looking to see this to begin with. So this, to me, still looks right now like it's not doing enough to prove that it is, a higher time frame trend change in the making. A lot of people are thinking like that right now. And I think it's a mistake, because you have a majority of the evidence pointing out weakness and lack of strength, and what people are doing is they're looking on the lower time frame and seeing, big moves like this and thinking that, oh, that's how they begin. So, this is therefore the beginning. It's taken out a low, when I just think that we should require a lot more. If we're able to get, close this daily above, I would say 33.5. I think I said 33.5 the other day. Close back above this 33.5 level, then what I think we end up doing is just playing. Yeah, we have there's a potential for us to play back within the back within this range and just look back to the midpoint and back up to the high after that. So this structure right here, it did act as support, right? So I said yesterday, ideally we would want to see, and if you combine both of these, you get a better idea ideally you would want to see that the top side of this structure acts as support. But, how that occurs, right? So if we just open this, we have a strong trend day. What starts off as a strong day, but it looks like it's a majority of it is a short squeeze. You find balance, find relative agreement, and then we've spent a good amount of time back at the top side of the structure. Whereas, a strong trending move would have been something more along the lines of, yeah, you might have started with a squeeze. We might have had some kind of rotational behavior like this, but upon breaking down, coming back to something like this daily open, closing this gap, we should, in my opinion, have seen a much more swift response. The only really swift response that we've had after this broke down, besides this swing failure, is this squeeze that got pretty much entirely engulfed. Now, if you look at this price action, it's funny because this kind of reminds me of the Elon Musk candle, right? Where you had that big squeeze upward and then the grind after that. So I'm not writing this off right now, obviously, because if this seller meant business, then there's no reason why we should be able to grind back up there. And again, it's likely that if we reaccept back within a lower time frame range, it's the same as a higher time frame range. You'll probably just start falling back into the same behavior of rotating back within that range. Now these are for really low time frame trades, but it's just something to consider, right? The bounce off of this level, the pullback to this daily level, I would have rather seen something, the squeeze is fine, ranging, but then a swipe and an immediate reclaim. So it's the same in a lot of continuation patterns. It would have looked more along the lines of, this occurring positively than us coming where we currently are, which is more along the lines of this grind down. So I got long back here and ended up closing the trade out because you had kind of this W bottom. This was my long over here, broke up, but then started failing. I wanted to see that very quickly this started squeezing back to the top side of this range because ultimately we were back within the lows. If we're back within the lows after having this failed breakdown, I think we should have moved pretty rapidly back up to the highs. So it's my 2 cents. If we look at just the last 2 days profiles, again, this is pretty balanced, right? Majority of this was a balanced profile. Now we're sitting below where most of the activity came in, right? The bulk of the activity sitting above us. We're below VWAP. There's not a tremendous amount of follow through behind the move. All that can change, but after a significant move like this, if you're making a case for the bottom, I don't think you want to see it kind of melting back, right? Because at that point, I don't think you want to start exploring these lows again. I definitely wouldn't want to see that this low gets rated again, and I honestly wouldn't want to see, although I wouldn't be against taking a trade from there, I wouldn't want to see that we come back down to this bounce, not that bounce level, excuse me, right here. So what we're essentially doing is talking about this level right here. So just mark this off. So it's kind of like where these lows were shared to begin with. So I might take a trade off of that. Maybe you have some type of W bottom, but I definitely wouldn't want to see that we start accepting below, right, into this wick. That should very well have done its job, and we shouldn't be able to come back there and hang out. This is a V-shaped bounce. If you start coming back to that, after all of the exploring of the lows we've already done, there's probably a lot of stops down here, and I would hope that at some point some stops are in the clear and don't have to worry about getting hunted. All right, so high time frame, it doesn't, on the low time frames initially there's a really solid response, but right now don't have enough evidence to say that this is like a deploy all your spot moment unless we get at least just a close back within this range where the bulk of the activity took place. And then like I said, I said yesterday 36, 35.5. If we are treating the top side of this 35.5, 36 level as support, right? So I think this would be no matter where we sit right now, it's possible that we could pop up, reject off of this level and still come down and break down further because we are kind of, we're close to resistance, right? This is the midpoint of the range. And then from there though, my point is if we're above 36.6, 36.5, we put in something that looks like it's sold and sold and hold, then we could look back up to 39 and 4. And I said this in the newsletter. Let's say you do something like this. If you're all the way back above 40 at this point, I think you have a much more clear case, and this is a long that I would absolutely take for much higher prices, right? But we're talking we're talking a few steps from where we currently are, so we have to really wait for price to do most of that work. Does that all make sense? Looks like you have some absorption here right now. So see this at the highs? We're just going to go ahead and tag on a short, because we're floating back up to the highs. Oh, wait a second. That is not... Should have sold that. So I just tagged on a short position really quickly because we do have this kind of drift back up, but it looks like currently there's a decent amount of absorption at the highs. Let's see if we can get a little bit of a rollover. Not really something that's substantial. It's 200K contracts. And the idea is wrong if we're back above that level. But just looking for maybe a probe of these lows. Looks like it's popping up. What we'll do is go ahead and just place a stop above 30. I rarely would put stops on trades like this, but just for the sake of the stream. 34.8. See, this is where the other ladder comes in handy, because I don't have to. I'll just go ahead and put the stop on the other screen real quick. One sec. 33.4. Just so I don't have to monitor it above that high. Okay, so questions real quick. All right, let me just go through the chat. Okay, would positive market sentiment be required to get above 38K for a possible push to 42K? So the trouble is there is some positive developments, and this is more along the lines of ETH. There's some large buying of ETH, more positive news with regard to ETH, and there was no real response in price. There's more positive news by the day, it seems, after you have a wave of FUD with BTC. There was like the New York governor that's running. I'm just going to flatten this because it looks like we're probably going to pop up. Even the buyer is good right now, so I just flattened the trade. Normally something like this, if we did have absorption and it was looking like it was going to roll, I would expect something a little bit sooner. And it's kind of not the most attractive setup. So the kind of bullish response that you want to see has not been there for a while. Michael Saylor definitely doesn't help, but I think that I don't think that we're ready to just pop back up to higher prices right now. I cannot see the range bound movements prior to yesterday's low repeating. Yeah, so okay, I get it, Pedro. Yeah. So I think we might actually get a little bit more of a pop here. But if if we start accepting back into the range, then I'm just going to have to I'm going to just try to I'm going to just play the range, right? In terms of swings, right? These are, if any, swing setup. Otherwise, I'm just going to be trading the 1 minute chart. So, do you think EIP launching tomorrow is enough? No, I don't think so. I think that EIP has probably pulled in a fair amount of buyers already. So I think they're already reflected in current prices. So the short I took today at 34.6. So I shared which trades did I share today? I think I shared some. Oh, right here. This was no, this trade that I took was just me. This initially was going to be if I kept. So I've been taking longs and shorts the last 24 hours around the clock. So one of my trades was going to be that I held along, and I ended up pulling it off a little bit earlier. And this was going to be my ideally would be my exit point. So it's not always the case that you're going to look at an area that you're going to exit as an area to enter, but if it is an area that is not so an area that I might take profit into might be something like a point of control. So an area that has been, let me just zoom out a little bit, an area that is a point of control, that has been part of a period of ranging price behavior over the course of a couple days. And in that case, I'm going to look a lot of times for price to return to that level, and that'd be an area where I'd likely try to exit a trade. There's a couple cases where I might take a trade off the point of control, but very rarely will I. So if I'm taking a trade, so let me clarify, if I'm taking a trade to the point of control, just because that's a place that I'm looking to exit a trade, whether it's a long or short, doesn't imply that I'm also going to be looking to, therefore, because that trade's over, even though I'm expecting it not to go anywhere from there, it doesn't mean I'm going to be taking the opposite. This case, this was an area that I had initially kept in mind as a target, and it wasn't one of those cases where it was an area that was, price spent a tremendous amount of time in. It was an area where we just rejected. It looked like a good area for a grab of liquidity. And this morning when we did have this move, it was one of those trappy type of spikes, right? Where you have price had been sort of consolidating within, this was around a 2% range. Let's just test my memory. 2.2%, so roughly. So price is stuck between a 2% range. You have multiple periods where you do tap above recent highs. So it looks like throughout this range, you do have liquidity grabs. A lot of the times, so a move like this, after a period of really tight price action where there's, this is essentially, this ranging period was longer than this trending period, right? So this squeeze led to a really long ranging period. It's very rare, in my opinion, that you're going to have something like this where the first really big break leads to continuation after spending this much amount of time moving sideways, right? Moving within this kind of tight range. A lot of the times what that is it sets up the perfect opportunity to grab any kind of liquidity, right? It sets up a fake out. Now, whether this occurs first to the downside or first to the upside, is something that is just a matter of circumstance. The fact that we got it to the upside, it didn't give me the impression that this was going to be a move that had follow through, because we didn't really have anything before that. We had multiple taps, but no follow through. So the move that followed immediately, once we started pulling back, I just kind of very quickly, once we stopped, once it looked like price was kind of stalling out and the tape was kind of slowing down, I immediately got into position. And if we look back at the footprint, or rather if we look back at the TPO, this spot right here would be an area where you would expect this kind of imbalance in a range bound environment, where you would expect that off of a weak move that this level might hold as resistance, right? So the idea is that off of these lows, the move wasn't, besides this portion right here, wasn't that strong today. So considering it wasn't that strong today, I'm going to be placing more weight on some of these maybe less significant areas if price had more of a push behind it. So single print lines up with, and the single print is because of that high. So you can think about it like that. As a key area to expect that price might bounce off of. Didn't really buy this move to begin with. And if you look at, we just go back to the footprint, just makes things make a little bit more sense. Zoom out. Here you go. So you could see that the latter portion of this move is a majority of it is a squeeze. So I don't know if you could tell, but it's from, you could see open interest drop off, right? Open interest drops off, right? And there's not much there's nothing really behind this move. Look at this footprint right here, and then look at something like, even something like that. I'm just trying to give you the idea that you can see that there's a lot more activity. I mean, I have it set to a certain sensitivity with my shading, but you have nothing, you have no real high volume within here at all. You have this very thin activity towards the high. Now, this on its own, right, can happen where you'll have a squeeze, especially during a squeeze, and to the left you'll have zeros. What that means is that as price went up, the bid never followed, right? It never went bid. It was all grabbing of liquidity above, and the bid never followed it. All right, so on its own that might happen, and it might not mean anything, right? It might not mean that it's a failed auction, that, you know, need to return to it, blah blah blah. When you have multiple periods of that, all right, and just really thin activity, it's, you know, it's an indication that there's really nothing that's supportive of the move behind it, right? It's just a squeeze, and it happens to be into an area where, you know, would be a good area to potentially look at as taking profit if you were long, in an area where we might expect a reaction to begin with. So this just looked like a time when there was a really good, it was a good location to define risk. And the way that the move, excuse me, one other thing is that a lot of the times, if you have a vertical move that's leading to continuation, it's not just leaving its origin like this and starting to squeeze upward without first doing something like this. So if you have a vertical move that's going to lead to a much larger period of continuation, or a move that's going to lead to expansion to maybe a new area of balance, a lot of times you see that it begins by doing something like this, right? This portion is part of the reason why it helps it move up, right? Because it creates a good amount of fuel by creating that selling activity, squeezing any kind of shorts after price pushes back against them. It's very rare that you'll have something like this where you have a vertical move, take the highs, and then you're just kind of squeezing back up, and lead into continuation, especially into an area that, you know, should act as some type of resistance. More often than not, you're going to see that there's going to be, especially in a range-bound environment where it's not bullish, you're going to see that the first move is usually a fade-worthy move. And honestly, that was kind of the same reasoning why I took the long off of these off of the lows. There was a bunch of criteria that was adding up. So we had the probe of the highs. If I'm going to talk about fake outs after ranging behavior where there's not much going on whatsoever, and it's kind of buyers and sellers fighting out within a 2% range, the first move I'm saying that's probably going to be a fake out. The move down to the low, I'm not going to expect that that's going to lead to continuation necessarily either, because this would be the first retest of that daily level. So just to zoom out real quick, just to remember what you're looking at, that's that daily level. So it's the first retest of that daily level. Let me give this 1 sec. Let me put on 3 minutes. That'll help. Oh shit, hold on. Okay, so price is stuck within a tight range. Fake out to the high. On, you know, much of this is just a kind of a weak squeeze, pretty airy. Price breaks down. Now this area right here is pretty much a gap, right? It's not exactly a gap because there was not. It's not like it's, you know, it is single prints, but yeah, you know, more or less this actually was a gap. Excuse me. I'm thinking about the profile now, but this is before it developed. Earlier in the day, this was a gap. But more importantly, it was an area where you could expect price to bounce either way. 1 sec. EXO's been really junky lately. So expecting price to bounce here regardless. So if I'm thinking, for example, that there's some key levels that I want to look to see price return to, if we're talking about them being down at 33 and we're back above a prior daily level, and we haven't taken out these lows yet, and again, we've been moving within this kind of tight range of again, 2%, took the highs, I'm thinking the same thing is going to happen at the lows. So I'm expecting that first to happen. So I'm going with the first level that is local, and I'm going to look to get in position after we take out these lows. So I think I got long right around here. All right, so I didn't get long off of this, but we found our footing there. Very rarely, I think that you will have, you did have this at the highs, but I wasn't expecting that this would squeeze up just like that. If I'm taking a long right now, I want to have extra evidence that it's a good long worth taking, which means looking for setups where you do have maybe a bounce. You're not going to see, leading up to this, you're paying attention to price action. This is not showing tremendous amount of strength, like I said. So all leading into this, there's not, there's not a ridiculous amount of strength behind all of this. You would have wanted to seen it show up earlier. So after a move down into the daily level, I'm going to always be expecting a retest of this low or rate of that low. So that's where I look for my long setup, right? Spikes through the low, trading back within. Then we have sort of a W setup. And in this trade, you can either look to play something like this. So you take this low, draw this a little cleaner. So let's say that this is your grab at a low. You could a lot of the times look for a quick opportunity just back up to this, this pivot point. But that you run the risk of stepping out of this trade when you might at this point have a continuation play upon you, because now you've retested a daily level. You have a little bit of energy you've been waiting to show up, right? You have signs of maybe this double bottom on the low time frame. So this I ended up exiting a little bit prematurely because it did go up a little bit more. But look where it is now, So trading the low time frames is, I think what you have to do is just get accustomed to what kind of behavior and range price has been stuck in. And it's not like we're talking about, perfect looking ranges in the higher time frame. But, price is stuck within a 2% range. You have very clear areas where traps would exist, where you're sort of, your breakout traders are looking to jump in. And breakout trading in crypto is probably the favorite amongst traders, but one of the most dangerous, because very rarely does a first move lead to continuation unless there's a lot of strength initially behind it, right? All right. Okay. One sec. Order clusters. This is on XO charts. This is the footprint chart. So if we go back down to that W bottom too, just to give you an idea what we're looking at. So here's your initial W bottom I was talking about. I'll put this on a higher aggregation so you guys can see a little bit easier on your screen. Like I said, XO has been acting a little funny lately. There we go. One sec. There's a spike of the highs. All right. So, you had a good amount of selling into that low, right? This is your breakdown, and this is kind of your W right here. Now, this is not the best, a setup that I might be more confident in taking, but still end up taking, I took this either way, would be one where, there was a standout amount of volume on both sides, but you do have that one-sided selling at the low, right? So, for example, there's a lot more volume up here. I'd rather this be more towards the lows, but as you can see, on the break of this low, so in this little W bottom, right, you do have that 4 million contracts at the sort of pico bottom. You have below this low, most importantly, you do have a good amount of volume. That is probably one of the more defining features, I think, of a setup that has more follow through. So this could be a determining factor in how long I think a trade is going to play out. Meaning, this is the low that we're focused on. Again, this is here, right? So you have the first tap, always expecting those lows to get tapped, and a lot of the times that's going to keep continuing to happen, right? I shared a setup the other day in BlockRoots where it's just constantly, it was like consolidation, pop up, rate of these lows, 50 basis point bounce, right? And then it went on to do whatever it did, and then it would consolidate again, squeeze up, even better when it's a squeeze, retrace, take these lows, 50, 100 basis point bounce. So one of the, I guess, more important parts of that is that a lot of the times you will see the bounce if it is a squeeze that led to the move up initially. So this right here, you do have, and initially you have this sort of mini swing failure, squeeze upward, end up rating those lows again. So once we're trading back within those lows, I'm kind of just immediately targeting, the next sticky area, which would be this pivot point, right? If we have, if this is filled with fuel down here, we have a ton of selling, just look at this volume total, then, I might expect that maybe we get more or less out of it if we have more selling or less selling. There's a good amount of volume, but it just doesn't sit quite above, rather than a lot of times what I want to see is that, okay, it's sold, and then this has, volume in excess of this candle that led to the, this candle that placed this low. So it does have excess volume, but it's, no, it does have excess delta, but it doesn't have excess volume. So really quick, here's your low. Total volume for that is 94 million. And then you could see that what ends up making this low is like a third of the volume. So that's not like that's kind of the opposite of what you really want. And this is kind of just helpful, I think, in helping you distinguish between what is a really good setup for this lower time frame approach. If this is the low, let's say this is like, you see this is like, this is 25 and, this is 96, right? So then the break at this low led to an increase in trading activity. Imagine a lot of people may be expecting that, this was the bounce, therefore this should hold, therefore this is the breakdown, get short, etc., etc. If you have a lot of that volume there, it just leads to a larger move. The one thing that does stand out about just this little rotation is that majority of it is that negative delta, right? So 29 million contracts traded, but 22 of those is, negative delta. So, that is in excess of aggressive buyers. That's aggressive sellers. So these setups are in this kind of choppy environment. This is why, trading the 1 minute chart and just being willing to accept that it's a 1 to 2% range you're dealing within, you could take these sweeps constantly. So you have a low put in right here, for example. Price has been sort of getting back to a balanced state. There was no immediate trend move upon the breakdown. You have this kind of crabby behavior, no real trends present. So you have this squeeze, and again, like I said, a squeeze is important. A lot of the times I'm just going to be getting long on a acceptance above that level, right? Which means, I'm probably honestly getting long right here. All right. If you want a little bit more, you could wait for the pullback that holds. A lot of the times, if I'm looking at this to begin with, and I didn't take this trade, so let's go take a look at it and see what we would have thought to begin with. So this is the, one sec, which one is that? This is, the low is 32.9 and this low is 32.7. So it is this move right here. So I just want to take a look at that. 32.9. Yeah, all right. So this is kind of your best looking low, right? If you're looking for a squeeze, is this kind of hammer candle and all of this volume at the low. And we'll split this up and just do bid ask. And you can see there's, it's thick down there, both sides. Now, this is against the ask, right? So those passive buyers those aggressive buyers are doing well in this position when price trading above it, but you're still squeezing someone because someone provided liquidity and stood on the opposite side of that. So really, that's why I don't want to get things too messy. If you want to just look at the volume, that is useful. I like to see when there's big differences. Same reason I want to watch the tape too, to see when large orders stand out. But if you're trading below or above where a ton of volume came in, you can make a case for a trap regardless of what side it came on, because it's implying that someone took the other side of it. If someone's placing an aggressive buy order, it means that someone sold passively, and they get trapped as well. But this is the return back to the level. So the sweep of this low, and again, this is not the best kind of setup because it's not like you have a multiple of volume compared to the prior, but it's still it's still a tradable opportunity, right? I mean, if you look at this low, for example, and I just switched it to bid ask, so you could see, all right, so it was sold. You have some pretty one-sided activity in the candle that followed, right? And then things begin to shift here. And 9 times out of 10, I'm probably taking this trade, even if it doesn't look perfect. But if it looks really good, maybe I'll consider leaving it on for a little bit longer, or maybe expecting that it's going to have a little bit more follow through. It might mean the difference between me placing, a take profit outside of the wick of the apex that I'm aiming at, right? So, for example, if I'm looking to take this this play right here, I might be considering either this as the next sticky area, or maybe taking these highs right here. Who knows whether or not that decision making really adds up based on me seeing more or less volume, but it definitely helps to see more volume at the low than less, especially when you're taking sort of a counter trend move, because price is breaking down here. If you're seeing someone get trapped down there, you want to see more so that you get more out of it. Okay. So something to consider is that quarterly, in traditional markets, equity index futures expire the last Friday of the month. So that makes it this Friday. But quarterlies expire tomorrow, Thursday, excuse me. So that should be interesting because, as you can imagine, the quarterly expiration is pretty significant and has usually there'll be some volatility that follows after. And I'm wondering if, because of that basis trade for so long now being gone essentially, that when the quarterlies expire, we might see some hedges taken off. We might see some relief, right? If there's anything that's suppressing price, sometimes that's the case. And there is a large options expiration, but I don't know. I don't know if that's as significant as it will be yet. One sec. This is the DOM. I went over it in the beginning of the stream, so just watch the beginning again. What happened there? It just reloaded. So, I mean, you could make a case right now for, on the high time frame, by all means. Well, I don't know why this is taking a second. You can make a case for this. One sec. Hopefully the stream isn't lagging. What is going on? Okay, I don't know if that's something with TradingView or whatever. Good connection, so I don't know what it is. So we'll just zoom out on this because, yeah, there we go. So TradingView's back. What is going on? You know what we'll do? I'll just move this over real quick. Okay, so this is Quant Tower. So you definitely can make a case at this point, for this being an SR flip, right? And so far having what kind of response might warrant maybe continuation, and at least it's a pretty decently defined trade. I would rather see, if you're going to break down from here, I would rather see that we swept a little bit more of this structure. We came down here, kind of just sitting on top of it. Like I said, if this was really bullish, I would have rather seen that it didn't really spend much time down here, period, and we had a really strong daily candle today. Because the way that this breaks down now, it's almost like you want to see that it maybe raids a little bit lower. And then we have a situation where, kind of like an oh shit level is right here, where maybe it's like, oh my god, now we have to get back into hedges and sell, and this is clearly breaking down, and then this leads to a more bullish move up. I don't really like getting in position when things look like they're just kind of sitting there allowing you to. If that makes sense. Um, Usually opportunities shouldn't last long. It's like the concept of a sale, right? If it's good, why are there still a lot left if it was on sale, right? Price is expensive up here, it's cheaper down here. Why is it still on sale, right? Um, these trades, they do add up. They do. Um, yeah, so for footprint, I've been having a lot of trouble with EXO today, but I've been going all over the place with using everything you could use in crypto. That's the one trouble with crypto is that there's so much fragmentation, but that's a reason why there's so much edge to be had. Um, so normally I would trade Legacy on Sierra because it's just integrated with prime brokers and you connect to anything and that's it. But with Sierra, not to go over it again and entirely, everyone should be familiar with this now who's been following along. You can't hook up to every exchange. All right, so that's a pain in the ass. Quant Tower, the little differences in the way the TPO loads and scales, I don't like it. So like as something as silly as me rolling my mouse wheel and knowing how smoothly something works. All right, so I don't use the TPO on Quant Tower. I have a window open with EXO, but I use Quant Tower, like I said, that's already on the screen, for the execution, right? Another thing that I like to have up when I am using Quant Tower is I will, and just to give you an example, we'll just mark it into one contract, right? So we'll buy one contract. Immediately with Quant Tower, I'm going to be very quickly, I could just do this right away. I could set my stop loss. I rarely use a stop loss when I'm scalping, honestly. It's probably like a tail risk stop loss, which is much further out, just in case like I step away and price kind of really gets away. But a lot of times I'll be getting out of the trade, and I think Glim went over this recently. I'll be getting out of the trade before it's entirely wrong anyway. But with Quant Tower, I can immediately set this, right? Set my take profit. I could trade right from, right away. I could do this. So I just open the mouse, sell limit order, open the mouse, sell limit order, and I could just trade right from the chart, right from here. So I'm using a lot of different things, but for the TPO, I'm primarily sticking, and the footprint too. Quant Tower's footprint, I don't know. It kind of bothers me. It doesn't offer as many settings in terms of the rotation size or the periodicity. It's kind of a pain in the butt sometimes to load other things on Quant Tower too, but you can't beat trading with the ladder. And there is edge to be had on the ladder. I just don't think that you could really get into it in a YouTube, honestly. That would be something we'd have to have like a YouTube series around. Does my gut feel? Yeah, I don't know. My gut feels like in 2018, people wonder. So after big breakdown, people will go, okay, it broke down. I'm going to be really smart now. I am going to, sell resistance, buy support, but I'm not going to get caught doing anything that's further than the next major level. So what people are doing now already is like talking about higher prices. Okay, at best, I'm looking at, if we reclaim this range, it doesn't have to be exactly this daily level, but I need to see what I consider more strength. Maybe it means I miss out on the trade. Maybe it means I'm in the wrong trade, but it's personal, right? So that still means I'm taking profit at these levels because this happened. In 2018, just to tell you from experience, there were a lot of people that did recognize a trend change, but it was almost like they would have amnesia, and anytime price dipped again and reclaimed a level, it was like, oh, this is the dip, it's done now because, et cetera, et cetera. And while those things are really useful, like looking at something like Coinbase, I referenced this in the video the other day. I was like, yeah, this is, if you look at Coinbase, 1 minute chart, look at it on the 3 minute chart, look at it on the 4 hour chart, there's like a really substantial amount of volume at that low, right? There's spot buying at that low. That's exactly what you want to see. You have semi-capitulation. Sure as hell, price was brought into a level where everyone paid attention, and that's kind of what you need to have that big exchange, exchange of positions, exchange of supply. So this was huge. You can see the pickup from here to here. If you look at 4 hour volume, it was like 5 times the average. So standard deviations above the norm. I'll just show you what I mean. So this is, your big 4 hour candle right there is like 22,000 BTC. If we put on something like the 100 moving average just for a longer period, a little bit less responsive. You can see that that 100 period moving average is around like 5 or 4 or 3. It's at 4. So that's like 5 times the volume, right? So that stands out. That's definitely what you want to see, but I don't think that price is in a place where you could say like, oh, that is good enough on its own. In a market that is still exhibiting bullish market structure, hasn't really changed all, every time frame right now has changed, right? There's really no time frame that looks, the higher up time frames look bearish, right? So in a continuing bull trend where there's no major change, then yeah, that's the kind of sign you want to look for. Same thing with funding. In a bull market, that negative funding is going to really stand out as an entry signal, that backwardation maybe, because its structure hasn't really changed. So the sellers are coming in, but there's no major change yet. They're getting offside, the counter trend move, counter trend positioning. But there's reason now to believe that the structure, that things have changed. Sellers have been taking control. So those are just going to be part of, like the funding being negative is going to be part of this move, the same way positive funding was a really sustained period throughout this move, right? We didn't look at every period of positive funding and said price had to turn. Now that the trend has changed, like smart money is going to be selling rallies, and that's going to mean that they're going to be paying that interest rate component because it's going to be the right trade to take. So it's kind of like in a bull market, everyone is long and looking to gain access to leverage. So funding is going to be positive, and it's in the direction of the trend. It doesn't mean it's wrong. The same thing can be said for the bear market. So just one piece of data like volume or funding, it's not good enough on its own. And most important now, in my opinion, is reclaiming structure. Like that is the most important thing. So yeah, if we gain acceptance, clear acceptance back within this range, and I think that now this doesn't look how you would want it to look after a big reclaim like we've seen. Like you want the candle that looks like that, right? That the candle doesn't give you a lot of time to think or enter. It puts you in a position of wondering, when it's up here, if it's immediately going to squeeze all the way up here. All right. Sometimes it does, but you usually get a very bullish response. Maybe it settles a little bit more, but this is already running into higher time frame resistance. And when you change the trend, you bring in those higher time frame players are going to be selling those higher time frame levels the same way they're going to stand in at support in a bullish market. So I think that I don't want to say that lower prices are not coming, because there's really no major change that has occurred aside from one really good response off the low. You need a lot more evidence at this point, which means that you don't, maybe, the person who enters in early, they make more money in this trade, but in the long run, continuing to enter in early will probably lead to more harm than good. How many minutes are we into this? We're like an hour into this. Probably going to wrap it up soon. Yeah, probably going to wrap it up. But same as the last streams where we give away BTC, the link that I shared on Twitter, so this link right here, if you go ahead and leave a comment here, give me your opinion on the stream format. Ideally we have some opportunities to take trades during the stream. Right now, that would have been a decent roll right there. So this is the problem with saying we're going to trade during the stream, is that I start talking, and I had opened up a short back here, right? So it was actually right here. We ended up squeezing further up, but I'm not even paying attention. My initial target, if you remember where I circled was, or I indicated, would have been this low. It actually might have been a little bit lower. Either way, it's just like you lose track of what is occurring while you're doing the stream. It's the same behavior as it's been for the last couple hours. It's not looking that strong. Yeah, a move like this. So a bullish move usually occurs like this. So where you have a flag, even if you have a fake out to the high, you take these lows and then you reclaim, and then that leads to a continuation. So you could be looking at this right now thinking that it's doing that because, look, pull back. This could lead back into this range, but I think it's dangerous to, one, have a lot of time to be able to get into that trade, and two, start thinking that it's going to start looking like something before it does. So I'd be much more confident now at this point if we were back above today's point of control, right? Just because from a, from a volume standpoint where most of the activity came in, we're still sitting above it, excuse me, we're sitting below it. And, that would also put us above today's VWAP, which would make things look a little bit better as well. But I think I'm going to wrap it up because we're going on in an hour. To watch the tape, I use these. So I will show you something really quickly. Where did they just go? Did I get rid of them? Come on. One sec. I will delete one of these screens and show you something. I'll get rid of this and show you my other screen, what I'm looking at and how I have it set up. Display capture. Okay, make this smaller. There you go. So this is the other screen that I have, and you're looking at liquidation feed, a futures feed, and a spot feed. And what I will do is have it set up. You could hear it now. One sec. So that is the futures tape. And then this is the spot tape. You'll hear it in a sec. There's really no movement on it, so there you go. So what you can do is I will have this turned down a little bit. And then I can hear the difference between the spot and the futures market when we're at a significant level. So, but that's that, guys. I'm going to take off now, and I will do another stream on Friday. But go ahead and go onto this link. Go ahead and leave a comment, and anyone who leaves a comment will be added into the. I'll do a lottery, and we'll give away some BTC, and that'll be done tomorrow. Till next time, thanks for tuning in, guys. Be sure to check out our partners at Phemex. And if you're curious about BlockRoots, go to BlockRoots.com. We have an entire course dedicated to the stuff that we were talking about in the stream. I am still kind of bearish until proven otherwise. I think you need to require a lot more movement from price. All right, guys, take care.